Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. We have a special episode today for you. It is 2/22/22, February 22nd, 2022. Forwards, backwards, still the same. With that being said, we're here to talk today about why our countries and some states in most recent cases starting to remove cryptocurrency bans or those around all digital currencies. Joined by some outstanding friends and family of the VCTV community today to share their thoughts and insights as investors in this space. And before we get started, a big thank you to the Token team and to Hasmic for making today's episode possible. I'm your host, Kyle Ellicott. With that being said, let's go ahead and kick it off with introductions. Brian, you're up first. Short little intro and background for everybody.
Yeah, I'm Brian Asenja. I'm with Dream Galaxy Advisory. We also have a portfolio of crypto ventures, including a digital asset comparison platform. And I recently wrote a book called Cashless Society 101 to kind of help explain digital assets to the masses. So thanks for having me.
Absolutely. Thank you for being here too. We talked a little bit about your book just about a week or two ago as well, this cashless society that you're envisioning, but also that is unfolding in front of us. So looking forward to your thoughts around that. And Nuge, my friend, welcome back. A little background and introduction for those who may not know you.
Good seeing you again, Carl. Been a while. So yeah, quick introduction. Startup founder, started 3 startups in the last decade. At present, working as the founder of Yellowsify Technologies, working deeply into fintech and into blockchain technologies. Presently working across different countries. So you have India with iAngels in Israel, and recently expanded to Middle East. That's Dubai and Saudi Arabia. So yeah, excited to be back and good seeing you again.
I'm so excited to have you back. And last but not least, ladies and gentlemen, we have a special guest, one of my favorites. That's right. I'm calling it out. Gary Fowler, Grandmaster of Artificial Intelligence. But I tell you what, Dave from ProChain Capital, you rate top of the list, my friend. Welcome back, as always. A little intro and background for those who may not know you.
Thank you, Kyle. This is David Towell. I am president and co-founder of ProChain Capital. ProChain is a crypto-focused hedge fund investing in cryptocurrencies, equities of public companies, both long and short, here in the United States and abroad. And also, we do have a sleeve in the fund for private investments, all investments surrounding the crypto ecosystem.
So, David, let's start right there. You are investing in this. You are also running the hedge fund as well. So you're looking at all sides of this token versus coin. It is, again, 22222. Talk to us a little bit about why some countries and or states. So just for context, everyone, we had a bill put in place on February 18th by California to allow for the use of cryptocurrency or digital assets to pay for government services, taxes, and the like. We also had another one by the state of Colorado just a few days before that as well. So we're starting to see activity here on the state level. But David, why do you see some countries, or why do you think some countries and states may be removing this ban around digital assets most recently?
Okay, so I think we need to start a little bit further back because there are real policy implications here. So look, the permission for and the opening of arms for acceptance of cryptocurrency inside of any jurisdiction is trying to go ahead and lay out the red carpet to smart minds, capable folks, and also those that are inclined to go ahead and put their value in terms of earnings and investment into cryptocurrencies. And so if you believe, as I do, as I think everybody on this panel does, that the future of wealth will mostly be captured within cryptocurrencies, certainly the first movers in terms of jurisdictions that go ahead and lay out a friendly and maybe tax efficient or tax friendly regime are going to be the ones that are able to attract those people first. That being said, we live in a very not only cashless society now, but also a very mobile society now. So in fact, how sticky people are, how sticky businesses are, I think is questionable. But I do want to make another point. As we got on the air here, I got an email from a very well-known crypto pundit, which says central bank digital currencies will be one of the greatest violations of human rights in history.
Mhm.
And so, in contrast, or at the same time as we've got this incredibly powerful, radically changing, tool in cryptocurrency, at the same time, to the extent that cryptocurrency is very traceable, very much attached to a human being, like a CBDC could be, in the case, let's say, of China's digital yuan. Everything about a person can be known: spending patterns, exactly how much they hold, where it's being sent to, so on. So I think that we've got an incredible tension going on here. I don't think it's going to be solved anytime soon, but obviously what happened on the border in Canada with the truckers, and banning, payments there, and then the outcry from Kraken CEO, there is a lot in terms of policy that's going on here.
Yeah, and Brian, I see you shaking your head. I know you've got a ton to add. Your book is inclusive of some of these areas, but talking about what's happening right now, with a little bit of context, maybe from your knowledge of the book, anything to add on to what David said, and then your thoughts as well as to why some countries may be looking at this.
Yeah, I think wholeheartedly agree with what David has shared in terms of just the factors driving some of these conversations, and what we might see on the US side as a cautionary process, which is not, I suppose, usually the US way. I would have imagined Europe or other regions to be much more cautious in terms of how they're regulating these technologies. But I think I'm a little bit more optimistic in terms of the regulatory clarity we're beginning to see on the US side. We're not yet there, but I do think that conversations are being had. And if you look at some of the recent money transfer sort of guidance policies, which by default on the US side, at least that's the way they're looking at it. So any company engaging in the crypto or digital payment space has to acquire this money transfer license. And they're now offering guidance that anything over $600 has to be reported to the IRS. So I think this increasing layering of basically, I had another side note. I had a separate conversation while I was working on the book, and the conversation was, do we need a separate regulatory body just for crypto, or can we continue under the existing banking laws? And actually, that argument was from one of the leading. I think it's Coinbase that was sort of pushing like, oh, we need an independent. We don't want to go through the SEC anymore, right? But I do think that long term, as far as the US is concerned, they will not change the status quo. It will have to be, crypto will have to somehow fit in within existing banking regulations or frameworks, and only then can they be expanded to accommodate crypto. There's no world, at least even though we hoped it would have gone the other way. On the US side, we're not going to see this utopia of crypto being treated as this separate entity outside of the existing banking ecosystem. And that's, so that's where I think we are. And given that premise, it's encouraging to start to see these banking laws being updated to accommodate digital payments. We're seeing a lot of movement, and I'll be brief and I'll end here, around sports betting and all these other businesses that are actually much more crypto friendly and have a legitimate use case to start using digital tokens in their businesses. So as these become legalized in more and more states, I believe that will be the gateway to mass adoption of crypto and other technologies in the US.
So you call out in the US. Anuj, I'm going to throw this to you. You and I have had this conversation about the US, but we also have talked about this with India, and we've talked about this on a few other areas. Talk to us about your views. Anything to add on to Brian or David, but more particularly, let's step outside the US. What are you seeing around India? Because it's been a flip-flop. One moment we're in, one moment we're out. One moment we're in, we're out. And it just continues to go back and forth. And now we're kind of in. It seems like we're kind of open, but talk to us about what you're seeing.
See, it's fairly simple, right? We have been talking about this for roughly 2 years now, before the pandemic, before everything. And I have been just saying this one very same thing. collaborate, don't compete. All the crypto enthusiasts, all of these early adopters of these technologies wanted to come in and say, we want to replace banks because banks suck. No, that's not going to happen. Financial inclusivity at any given point in time is always a challenge. And then if we're just going to say, hey, we're going to replace bank, yes, that's going to create friction. Yes, that's going to create resistance towards it. But as more and more people joined in the ecosystem, they realized that, oh, we gotta try to improve the existing system. I gave you the example a couple of years ago how all these ATMs are still running on Windows XP because if it ain't broken, don't fix it. And they're finally getting to a point where they're realizing that, okay, if we don't fix it now, it's gonna break forever. And that's one of the driving features why financial institutions are actually adopting it in such a serious manner. On the other side, you're seeing a very simple example as to why all these crypto bans have been lifted, why there has been the flip flop. The government in India from day one wanted to block crypto because they wanted to protect early stage investor. They wanted to protect any scams from happening. And even though they tried, there were still millions and millions of dollars of scams in India. There have been plenty of people that have been held accountable for it. But yet, it saved a lot of people in those early days. However, free market rules, right? You can't just blanket ban a new technology because you're worried about people. You gotta give them the voice, you gotta give them the chance to be able to make those decisions for themselves.
Mhm.
And that's what's happening over the last 3 odd years. You're seeing blockages by the government being removed by the judiciary, uh, tax penalties being applied, and again bringing all of that into question. But it's not going to stop all of these. It's just going to make people more cautious. It's just going to bring in the philosophy of buyer beware. And if more and more people actually understand what they're getting into crypto, which is in itself a good thing, by the way, I see this as a very good positive that despite a 30% tax, if people are still investing in crypto that heavily in India, that means a lot more people understand what they're getting into. And once they understand, they're going to adopt this more and more. And as the ecosystem grows, as the adoptions become more widespread, the possibility always remain endless. You're going to see this adopting into the next big wave, right? DeFi, NFTs are just the tip of the iceberg. Internet of everything. That's the future. And then that's going to be a reality very soon as more people join in on this bandwagon.
Absolutely. And you talked a lot about investing. I want to switch the conversation from investing into digital assets to maybe utilizing a digital assets, as both David and Brian had also touched on that. Dr. Srikanth, welcome. Any thoughts to add as to why countries may be removing the ban on digital assets as a whole and looking to begin accepting them on a wider range? And then Brian, I know you've got some great comments here in our chat, so I'll be coming back to you next, but Dr. Srikanth, anything to add?
Sorry for my disheveled appearance. I was just trying to log in from different.
No stress. It's technology. No need to apologize. We're all here and happy to have you. Talk to us a little bit about your thoughts around again digital currencies being removed as banned in many countries around the world, or starting to be.
Yes, as a legal counsel who actively participates in the judicial process in India, and as someone who has mentored the government on these aspects, the I think it's a myth that India has accepted crypto as such. It is not. The even the recent budget in which the finance minister basically talked about cryptos basically said that, look, we are going to be taxing anything which is coming out of crypto, but look, the caveat is we are not recognizing cryptos as such. So I think from a acceptance point of view, the regulator in India, or India as a which is a significant jurisdiction or a significant user base as such, is not yet come to terms with the fact that crypto is going to change the world. What they're interested in, interestingly, is the taxation of crypto assets which are going to be utilized, and any income that it will generate. So that being said, the crypto ban is still there. I don't think it is gone. It is a myth that it is gone. But to answer to your point in terms of whether why countries are basically adopting crypto as such, is for the very simple reason that it is easier, it is transparent, and it is in line with the global strategy of transparency. As a matter of fact, just a month ago, and which is going to be effective from 1st of April 2022, every country is going to be subject to a 15% minimum tax, and they are not going to achieve it unless there is transparency in the process of any asset, leave alone crypto, in any asset that could be there. And I believe the government is waking up to the fact that, look, I'm going to tax it, but I'm not going to recognize it primarily because of the fact that I'm not able to trace where it is. I'm not able to see where it exists. But what I'm going to do is I'm able to see where the money, the fiat, is coming in, and I'm going to tax on that. So I believe the incentive for crypto ban would be very limited for jurisdictions like India, which is a 1.3 billion population, and we've got 70% of the population actually using mobile phones, and the tech has actually invaded India in a major way in the last 6 years. So I believe that this would stay as a very temporary measure, and India being a very conservative country, it is not going to do that. And I think there are a lot more conservative countries out there which are not comprehending what crypto is, and that is what is stopping them from removing the ban on cryptos. So I think the removal of crypto ban is such a large word that it could be dissected into two parts. Crypto ban, blanket ban, no, but crypto recognition, maybe yes, maybe no. Crypto tax, yes.
Got it. Thank you, Dr. Kanath. Guys, there's a ton of chatter going on in our chat off screen. So I'm going to come around. Everyone has their opinions and thoughts. I want to make sure you get added. So Anuj, let me come back to you, as you said you had something to add. Brian, then David as well. So Anuj.
So, really quickly adding on to Dr. Shrikant's point, I was part of the discussion with the Niti Aayog when they initially applied that cryptocurrency ban. They basically said one thing: we don't recognize cryptocurrency as currency. We're not even going to call it one. And like Dr. Shrikant said, he's called it crypto assets. And I think that's going to be the key future tense when we were just entering the era of Bitcoin, with it just being the major currency. Every early adopter then had an idea that this could be a global currency, a currency without borders. And that, I think, is not going to float. That, I think, as we are moving on to future, we are realizing not going to be the case. You're not going to have a currency that's global that can be used everywhere, because it creates problems for everyone. Every government at the end of the day wants to make some revenue off of it, right? So the blanket ban on cryptocurrency, I think that is still going to be something that has to be worked upon. Yes, crypto asset and blockchain as a technology, I think that's going to thrive. So why do some countries remove crypto bans? They're removing the bans on the asset. The currency word is still sort of taboo. We're not going to go there. But they are also actively adopting blockchain, right? India just did that in this finance budget. And that's a beautiful thing. So
Absolutely. Brian, thank you, Anuj. Brian.
Yeah, thanks. I definitely love where this conversation is going, because I think sometimes, even when I was working on the book Cashless Society, everybody thought it had to do only with cash or money. I think there's the blockchain ecosystem, there's the automation, the transparency, which is important to regions like Africa, visibility into monetary flow. is of interest both for governments and regulators, but also for citizens in understanding how their governments are actually spending money. So I think there's, some of the themes I touch on in the book are identity, obviously digital identity included, ownership, trust, and obviously scale. The key thing that we're both talking about now is the trust component, and that comes with the transparency mandate from both sides. And I would agree to wrap up with everybody here that taxation is the only way government sort of institutes some level of accountability in the system, right? We're gonna measure and tax, and that's how we get our part, right? Gambling used to be illegal until they found a way to tax it. That's why I said on the US side, the casinos are the way in. The moment they figure out how casinos can do this and use virtual tokens and rewards and pay their casino winnings in some form of crypto, and they can tax that, they will have a precedent on how this could apply to other larger institutions. For emerging markets, in summary, I think it's beyond just the global currency thing. I think emerging markets like Africa are actually adopting crypto out of a necessity to not be overly dependent on the US dollar. So we already have a global currency called the dollar, and not everybody is happy with that, China included. And I think for me, it's that fragmentation of ideas, we can call it that, every country trying to survive and create its own local tax economy that will actually allow for a localization of cryptos so that they can be tested in different environments. And who knows, long term, these central digital currencies could take over and one could be dominant. Great. But in the interim, I think crypto is now moving from being a global conversation to actually being localized, to saying, okay, we don't have to wait 10 years until the US decides what it does. What can we do today in Kenya? And I think that's what's happening in El Salvador. That's what's happening in those areas, because the idea of a centralized jurisdiction determining the fate of the world is no longer possible anymore.
David, anything to close on that note? A lot of things were said, talking about India to what's happening on an asset level versus an investment level, and what Brian just mentioned as well. Anything else to add, or maybe take a different opinion on?
Well, I'd just like to bring it back to the United States, because at the outset you had spoken about, states making moves.
Yep.
And I do think that states, on a bipartisan basis, frankly, or governors, bipartisan, are making moves to make cryptocurrency much more of an acceptable form of payment, store of value, and transactional activity. So, just as an example, I don't think mayors taking their salaries in Bitcoin is particularly mind-blowing. I don't think it's particularly important. It's a good headline. But in terms, I think yesterday, both Georgia, I forget what other state, came out with, they're going to try to go ahead and give tax incentive to Bitcoin miners in their states.
I think it was, oh my goodness, I think it was Tennessee did it again, and then Kentucky has done it as well in the past. But
Okay.
Tennessee, yeah.
I think there was an announcement yesterday about 2 other states. Forgive me.
No, keep going.
Not Colorado, but go on.
And then certainly, there are states that are out in front, like Wyoming, in terms of setting up real state infrastructure when it comes to, banking activities and so forth. And even in Colorado, there is a lot by way of, trying as quickly as possible to make a lot of government-related payments that residents need to pay, and so do businesses, capable of being paid in cryptocurrencies. And I think it's great that those state governments are taking the lead on doing that. I think at the federal level, we have an absolute mess because of the interrelation and, frankly, fighting between the various regulatory agencies, Congress, which can't get themselves in order and politicize, every possible issue, including crypto assets, And then I think the presidential administration, which I don't think is necessarily up to speed and doesn't necessarily want to go ahead and make an issue out of this because the administration has way bigger fish to fry right now.
So real quick, just a note, I did fact checked it. I was wrong. It was Tennessee previously, to your point, along with Kentucky, but and Ohio was another state that mentioned. The announcement you're referring to, David, was Georgia and Illinois as well. So
thank you.
You're welcome. Quick Google and we found that out. So there we go. Live. Awesome. Well, gentlemen, I will come around for closing thoughts here as we are coming up to the top of the hour, and maybe what you're excited about going into the rest of the year here. We are at the close or close to the close of February. Again, 22. And with that being said, we've got about 10 more months left in this year. A lot of technology, a lot of opportunity, also a lot of changes that could happen. So in your closing thoughts, anything else to add on today's subject, but what are you most excited about to see happen in the industry overall at a global level? And then where can you be found? Dr. Shinkanth, let's start with you to close us out.
I think the great first step. I think it's a tiered approach. We've got the NFTs, which are at least traceable to an actual asset, which is placed. So we know what is there and what can be traceable. I think a recognition of that is in the meaningful interest, and combine that. Let's weigh the pros and cons, right? The pro is that the governments want transparency, and the governments want to. 156 nations have actually signed a treaty that they would go with a 15% minimum tax from 2022, and they're not going to do that without a transparency in the process. And having the transparency in the process is integral to the government's agenda to actually have visibility over crypto. That is a pro for the government. And another pro for the government is the fact that there's income which is coming in from crypto that they can tax on. I think these two are typically the pros. The con is the fact that it can be misutilized and so on and so forth. I think the pros just outweigh the cons, and I believe it's a tiered approach that the governments will take in terms of the removal of the crypto bans. So they will follow suit, but I think it's going to be a slow pace approach in terms of removing the crypto bans, and we will get to a stage where we understand enough of the crypto market to actually remove the ban altogether and say that, look, let's operate on cryptocurrency.
Thank you, Doctor. Anuj.
I think I agree with Dr. Srikanth. It's going to be a tiered process. You're going to have the baseline where you're going to adopt the technology first, which is blockchain. Everyone's going ahead with it. And then you're going to have more people building towards that community, more people collaborating in that ecosystem. So you have companies like Polygon that's actually making a major difference. And then as the ecosystems develop, you're going to get to a point where currencies can be digitized. I don't see a future where there would be one global currency, but yes, something like digital yuan, which can be bought into the society, that's going to act as a first step towards moving to a more cashless society, a more secure society, an ecosystem that's driven by the community, that's updated on a constant basis, so that everyone knows we are all safe and we are all in this together. I think over this decade where we're going to see that major improvement come in, to anyone who has FOMO over missing out on the crypto boom of 2017 or 2021, don't worry, there's going to be more to come. There's going to be plenty more in this decade. And then who knows what the future holds. As I say, Internet of Everything, where we're going to get to a time, if you're going to have a driverless car, I can't wait for a future when those cars are actually talking to each other. So yeah, let's see what 2030s brings for us.
Heck yeah. Brian, quick closing thoughts. Where can you be found?
Sure. I think two things. I agree with everything that's been shared here, including the US side of things, depoliticizing. For me, it's utility of our investment. I think that's the next frontier. That's the next hurdle that we need to go over. On the US side, already we're seeing businesses. We use a cash management platform that allows us to convert some of the credits to crypto on the side. So I think businesses are already innovating around blockchain and crypto and beginning to integrate it into the banking infrastructure. The tax policy clarity is waiting to happen, sure, but nobody's saying you can't accept your Bitcoin or something, right? So businesses are the next step for 2022. I believe 2023, 2024 will be more of the consumer, let's say, mass adoption revolution once businesses are comfortable with accepting these crypto assets. So I think globally, my last point is that globally, yes, no single currency. I do believe that digital asset conversion platforms, like one of the ventures I'm working with in Singapore called Skybit, are really actually going to be key players in helping people convert between fiat to digital assets and vice versa, and across different assets. So while there's still fragmentation, which is a good thing, and decentralization, which is a good thing, it's the digital asset conversion platforms that are going to power that ecosystem so that there's frictionless transactions. And I think those two areas are what I'm focused on or following.
Thank you. David, close us out.
Sure. I'm much more short-term focused. I want to see what happens to the crypto asset class generally over the next couple of weeks, especially with what's going on with Russia and Ukraine, and then also with what's going on with rates rising and inflation numbers. They're all, we're now at, let's call it January lows. And, has there been a fundamental change over the past couple of weeks? How will investors go ahead and react to what I think is, especially in the case of Russia and Ukraine, somewhat of a paradigm shift. And then also what I think will be a longer process when it comes to inflation and rates, kind of working themselves out. Are we in for, some sort of relief rally, or are we going to go ahead and hang out here for a while until such time as people generally get comfortable with the new status of things in both spheres?
Wonderful. David, Brian, Anuj, Dr. Shikant, thank you very much for your thoughts and insights. To our audience, thank you so much for tuning in as well. We'd all love to hear from you. If you're building or working on anything in these areas, reach out, connect. But when you do, make sure you add context, where you heard us, where you met us, and what you would like to continue the conversation about. Big thank you to the Token team and to Hasmic for making today's episode possible. I'm your host, Kyle Ellicott. Until next time, everyone, have a great day and enjoy 22222. Take care, everybody.
Thank you.
Bye.